Every single morning at exactly 10 a.m., something specific happens in the market, and if you get good at spotting it, you can make a ton of money. For example, here are the past 9 trading days, but if you look closely at exactly 10 a.m. on all of these charts, our strategy is taking place. This strategy is a money-making machine, and I'll even prove that to you by sharing my own personal private backtest results at the end of the video. To break it down, the main component of this strategy will be using AMD, and I'm not talking about AMD the company. I'm talking about AMD the strategy. It's really pretty simple actually. You basically want price to move sideways or to consolidate like this, which is called accumulation. With this accumulation, there will be resting liquidity above and below these areas, which will give us fuel for a big move. Next, you want some form of a liquidity grab to the upside or downside, which is the manipulation. If the chart is going to move higher, it needs to manipulate to the downside first. If the chart is going to move lower, it needs to manipulate to the upside first. Once price manipulates in either direction, it tends to skyrocket to the opposite direction, which is the distribution, which gives us accumulation, manipulation, and distribution. Or in other words, AMD. Now, if the market is bullish, you're gonna see an open, a low, then a high. If the market is bearish, you're gonna see an open, a high, then a low. This concept is what's gonna help us predict what the market will do next. But we have some important steps we need to do first. First step, go to TradingView. If you don't yet have it, I'll put a link in my description. Next step, you wanna find a bias for the day. To do this, I like to go on the 1 hour time frame. Usually this will be pretty clear to spot. If the market is making higher highs and higher lows, it's an uptrend. If the market is making lower highs and lower lows, it's a downtrend. Pretty simple. In this case, the market is clearly bullish, so that will be our bias. Next step, go to the 5-minute time frame. We are only gonna look for trades at exactly 10 a.m. to 11:30 a.m. That's Eastern Standard Time. Or in other words, 30 minutes after the market opens. So to make this easier, we're gonna mark this time zone with 2 yellow lines, one at 10 a.m. and one at 11:30 a.m. We only look for a trade setup inside these 2 yellow lines. If a trade setup happens outside these yellow lines, we do not take that trade. Since we have a bullish bias, we want to see 2 things happen inside these yellow lines: accumulation and then directly after, manipulation. Right at 10 a.m. we have sideways movement, or in other words, accumulation. So we're good there. Next, we want to see some manipulation. Since we have a bullish bias, this manipulation needs to head towards the downside, which is exactly what happens. Once both of these things happen, we need to look for a spot to enter a trade. I prefer finding a fair value gap for this. A fair value gap is simply just a large jump in price where there's a gap between the candle before the big move and the candle after the big move. This is our fair value gap. After a manipulation to the downside, we see a large spike in price, leaving behind a fair value gap. This is where our entry will be. Wait for price to come back down to this gap, set our stop loss below the low, and set our take profit at the high. Boom, you got an easy winning trade. But we ran into a slight problem. So this stop loss and take profit strategy is all good and all, but there's a little trick you can do in order to get even better take profit areas. First, you want to grab your Fibonacci retracement tool on the left. Next, go to the settings and make sure you're on the styles tab. And you're going to want to change these values to 1, 0.79, 0.62, 0, -1, -2, -2.5, and -4. Make sure all these values are gray, then make -2 and -2.5 red. This will give you something that looks like this. Now go back to our previous trade example. We still have the same setup with accumulation and manipulation, and we have price at our fair value gap for our entry. You're gonna grab your Fibonacci tool, mark from the low of the manipulation move to the most recent high. This will give you some really good levels to take profit. This red zone is where you should be looking to take the majority of your profits. It's even better if this red zone is in alignment with some other confluences. In this example, it aligns with our buy side liquidity, which is absolutely perfect. Now, instead of taking profits at this level like we did last time, we now set our take profit at this red zone, as we also know it aligns with a confluence on a higher time frame. We let the trade play out, and we get to ride this move for some extra profit. Now, if you know my channel at all, I like to test my strategies before sharing them with you. So basically, I do all the vigorous testing using countless hours of my life and test the strategy day and night to see if the strategy is even profitable in the first place, while you eat a bag of potato chips and get the results within a couple of seconds while watching my videos. I backtested this strategy for a whole month, and the results are absolutely shocking. But before we get into the backtest results, let me show you something real quick. So a couple videos ago, I said I was gonna test this copy trading feature on Intraday. It's basically a feature that allows you to copy top performing trading analysts while you see important information like how many people are following them and their win rate. All you have to do is simply click this follow button and it'll automatically take all the trades the analyst takes. I tested this feature with $50,000 a couple months ago, and my account balance is now $231,000. Yes, you heard me right, $231,000. Just from clicking a follow button. They also released a mobile app so you can do all of this directly from your phone. If you want to check it out, I'll leave a link to Intraday in my description. Okay, let's get to those backtest results, shall we? While testing this strategy, I gave the testing account $100,000 to start with, and I let it trade using the parameters of the strategy I just taught you. The chart had to have accumulation and manipulation, and it had to happen between 10 a.m. and 11:30. I tested this strategy for a total of 20 trading days, and it took a total of 15 trades, which means the chart fit our parameters for our strategy 15 out of the 20 days, or 75% of the time. So you can see this setup happens pretty often. Within these 15 trades, it had a win rate of 66.67% and had a total profit rate of 44.4%, which means if you started with $100,000, you would have made $44,406.91 in 20 trading days. Not too shabby. Test it out for yourself, DM me on Instagram, and let me know how it works for you. Thanks for watching, and I'll see you guys next time.